Good weekend, all. Ira Epstein, and here we are on Friday, the 27th of January, 2023, with your SPDR ETF stock market wrap up, your weekly edition where we look at the longer-term charts. Now, longer term, speaking of that, I just heard on the news in Chicago, which has me all excited, that in the month of February, we will gain over an hour of daylight from beginning to end going forward. We're gaining just over 2 minutes a day right now, so it's picking up as it's going, and it's going to increase. We'll maybe get an hour and 10 minutes. So I love that. Right now it gets dark here at 4 o'clock, 4:15, so that's going to put it 5:15, 5:30. That changes everything. And it also means with that extra light, the snow, when it comes, it has daylight to start melting it. I mention it because we're going into the Arctic freeze again for one more week. We're going to go get a high of 15 over the next few days without wind chill. But the snow hasn't really hit the city, which is a good thing. Okay, so in all that chill, there was warmth today for the Fed. The core PCE year over year is falling. It's around 4.4%. It's what the Fed wants to see. Then if you dive into the numbers that we saw today from the report that came out, you see the consumer spending a little less, trying to put some money away. What we're seeing in the credit cards is a lot of them are maxed out. We're also seeing, you get these flyers all the time. Hey, if you need a short-term loan, come to us and so on and so forth. Did you see how well Goldman Sachs did with that? They got their butt handed to them. They went into the business, and I don't know that they were wrong going into it. The timing couldn't have been worse during the pandemic when people stopped paying them, and they took a big hit. And that's what you got to be careful of here. And the credit cards. Got to be a little cautious. People are loading up on this debt. Can they afford it at a 20+% interest rate? Yeah, 20+%. Just think of what you got. It's great to use the card if you pay it off right away. It's terrible if you build a lot of debt on it because you're just paying off the debt. I don't know if you're hitting your principal. In Alibaba, market's looking good. The Chinese markets are back alive. That's why I brought this back on. The trend is up, the swing line. You're over the 18-week average. But now we're about to get ready to run into the first steps of resistance, starting on moving averages around the 136.90 level. And you're there right now in the Bollinger Bands. I brought this up because on pullbacks, this gets interesting. Have we embedded? This is why I'm bringing you there. Both numbers over 80 this week. Both numbers over 80 last week. Both numbers, the third week was here, not the week before. Therefore, do you know how to work with the Bollinger Bands? That's why there's a method to my madness right here. If you don't, I want to tell you, if you watch me regularly, understand my favorite trading tool is not the Bollinger Band by itself. No. It is the combination of this, the slow stochastic with it, and my variables. When you plot your slow stochastic, it will not be my numbers. I give the numbers to you when you either buy my course or you're a paid subscriber. You join us with our subscriptions. That's when I give that to you, and it'll match mine. And when you get that, it's the strongest tool I know of, because until that red line closes under 79, the pros are going to buy the breaks, because until the momentum disappears, that's it. Now, I've also, and I'm in the middle of creating this, a course that when you lose the embedded reading, what is the percent that the market's going to go back down to a key moving average? What's the risk factor? Which ones are too big of a risk, you don't take them, and the ones that you stay within. I'm building that course right now. If I had to just do one thing and trade Bollinger Bands, this with that, I'm done. I don't need the rest of the patterns on the chart. Learn this, okay? It's really that important from my perspective, at least. So then we come over to KBE. Trend is up, higher lows, higher highs. So until the market gets back under here, 44.96, got to get under that. I think the market's going to keep getting bought at the 18-day average with hopes by the bulls that they can lift the market up here to the 50.27 to the 50.97 level. In XLI, you have an embedded reading. So this is that correction. But look at how long. You have been since November sitting in the industrials right against the 100-week average and not moving against them. As long as you stay embedded, each time you're getting a break, I think you're getting new buying. But if you lose the embedded reading, which you haven't done for a while, then I think you're back to the 18-day average. If you can pop through here, the 102.98, I think you're on your way to 108.56. So interesting chart. In the energy sector, momentum has gone flat. The action is bullish. The support's right in front of you, the 18-day average. Now, here's what you want to start watching. Chinese traders will probably come back to their desks before the lunar holiday ends on, I think it's Sunday of next week, February 5th. What they'll look at right now is the companies will say, I want you back. Monday, Tuesday, Wednesday, they start filtering back in. Keep that in the back of your mind. And what they do is going to be extremely important. We'll have to be looking to see the demand they create, if they create the demand. In FXE, you've got the embedded reading. So the U.S. is talking of wavering on how many interest rate hikes to go. And the European Central Bank is saying they got to go 1.5 more points. That gives this the bid over the dollar. It's really that simple. Lose the embedded reading, then that's gone. Until that, I think the pros are still buying this, looking for the higher price. You have the embedded reading in the gold. You can see how the market's moved up. It's flirting at times with what? Trying to break out and keep running until it gives you a weakness here or gets a different chart pattern. It's still, in my opinion, still very much in the bullish pattern. The weekly chart, the weekly, not the daily, the weekly in the gold miners is still quite bullish. Fighting, though, at the 200 and the 100-day for direction. The first challenge generally doesn't work. That doesn't mean it can't work. It generally doesn't. You'll get up to key numbers. Example, you broke down to the 200, then you bounce. Then after that, you can get under it. And this is your first challenge of these numbers. So that's why I say it generally doesn't work. Can it? Sure. Am I bullish? Sure. Let's see what it does. Tesla. If I'm Kathy Woods, I'm tonight having champagne on you. I'm going to charge it to the business because this woman loaded up. Give her credit. She loaded up on Tesla. And her stock has come up back to the 40 level because of this baby. But you're at an important area where it's going to have trouble. I don't know how to tell you that, Kathy. You've already lost your embedded reading. And folks, if you take a look, what did my work do? Here's my work on the 20th. This is this week. You lost the embedded reading. The goal is these two numbers. You've hit them. Now, I know you're going to tell me, Ira, you're so wrong. It's going to keep running. Okay, prove it to me. My work is saying this is where the resistance is going to start showing up. In ARC, she's going to win because of that, and she did. The fortune here was tied in part to what Tesla did, but she really started bottoming about 4 weeks ago against the Bollinger Band. And what did I start you off with? I started teaching you as we were talking together here, and I'm going to prove something. Here's your momentum down. Here's the market. If you hit the lower Bollinger Band, you're not embedded. I'm telling you, if you were my client, you were paying me a fee to consult with me. If you hit that, you want to be out at the lower band. You're not embedded. It's time to walk away from the trade. Market starts turning on it, and bingo. Now the game starts again. What's going to happen? You're out of your bearishness. You know, you can't be bullish because even if you clear here 38.38, which you haven't done, 38.01, you'd have a higher high and a lower low. I can argue that maybe it makes a run here towards what? You got it, the upper Bollinger Band, but I think it'll have a lot of trouble there. The important thing is I think the worst is behind in the near term on a weekly chart for ARC. Big statement from me. In Apple, I'm looking at the resistance between the 18 and the 100-day average. I realize it's come up, but similar to ARC, you can't get a buy signal out of this. You get a reason not to be short, but not a buy signal. Big difference between the two. Meta, time to take money off the table. First time you're hearing me say this, period. I was bullish down here. You heard me say I don't think you can be short when you lost the embedded reading. You went to the 18-day average. Now you're up too high. You're at the Bollinger Band. This is where natural resistance should show itself. Again, move your cursor up here. Get into the education area. We have read. Learn it, please. It's going to be something. If I had to do only one thing and give up all this chart action and make a living trading, I would be trading the Bollinger Band with the slow stochastic. Got that? I'd use the outside days as to when I can come in and add to positions, along with, as I teach in the course, another key moving average. I'd be happy. And I'm going to add to it because I'm going to have the trades that when you lose the reading, how do you get involved to hit an area? Nothing works all the time. You do know that, right? So how do I get the risk factor where I can live with it? That's what I'm working on right now. We're through with that. So you put it all together. You try to come up with a game plan. I'm giving you one. I'm giving you one for 2023. Please take advantage and join us in the morning subscriber videos, okay? Because that's where the meat is. You're at the appetizer when you're watching these videos. You're not in the meat. I'm Ira Epstein. You have a great weekend, and I will talk to you all come Monday.